Hi traders and welcome to the Technical Analysis Market Watch on Friday the 25th of October. So I've seen some very big moves on a few of the currencies and the indices this week with some all-time highs reached again. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and you can see we've had a big week of selling from the previous highs here. You can see we hit the 66.20, which was the target. It was a pretty easy target, really, with all of the resistance and support that we've seen at this level previously, basically since the start of this year. And even beyond that, if you actually go out further, you can see right through here. Even back in 2023, it was an extraordinarily strong level of support right through the this level here. So no real surprise that it found some support there. But it has been a very, very big sell-off, no question about that. Look, the idea is now to try and find an opportunity, obviously. And yeah, we've got a series of lower highs and lower lows that have got it there. But there is a potential for a bit of a rebound. And we've got a 20-50 moving average cross, obviously, we have to be a little bit aware of there. But that's the consequence. It's taken a long time to cross because it was such a big, big move up in the first place. But really, knowing that we've got very, very strong support here, we go to the smaller time frames and see if we can identify something that would give us an opportunity. On the 1 hour, you can see we've hit the support. Bit of a double bottom happening here, and you can see we've got quite a bit of MACD bullish divergence as well. So you can see both troughs of the bottom. We've got MACD divergence, maybe an opportunity to get back up to around that 67-cent mark. This is that level here, the second blue line. If the double bottom does hold up, the neckline is around this level here. There is a bit of resistance there as well you're going to be mindful of, but the distance from the troughs to the neckline will equal the distance to the take profit area for this trade. So still a bit of work to do. It's still going to get up there, but if it does, there could be an opportunity. If you go to a smaller time frame, again, you'll probably see a series of lower highs and lower lows getting here, obviously. And then we've got that bit of a mini breakup, come back and retest it. They're the two troughs that we're talking about here. If we get a series of higher highs and higher lows in the most recent price action, then we can look at potentially even trading to the neckline, which would be the aggressive form of a double bottom trade. And then maybe the break of the neckline, look for either changing positions and adding a new one, or trading it in its own right. But not a bad little setup there if it gives us a few more higher highs and higher lows in the smaller time frame. But it hit the support. Next probable target is the 67-cent mark on a bit of a rebound. So if it breaks the 66, we're in a bit of trouble. So yeah, we'll see how this one plays out, but probably scalping mode, I would suggest. Let's go to US dollar CAD. Massive week again. You can see that we've hit, basically hit the 138. Almost 70 is the high, still hovering up there. Yeah, still a little bit to play out in this last candle, this last daily candle, but it's been very, very strong. Look, there's resistance here. There's no question about that. We know that we've got a fair bit of resistance, and the last time it hit there, it rejected very, very sharply. So I'd be very, very careful around this area. It's done its job. We've got plenty of trades out of it, obviously. So hopefully you've been able to get a good part of that. But now it's probably a time to be really, really careful. You know that we've got strong resistance at this point here at around that sort of 138.50. So trade with care. If it does break through and pushes up higher, then we've got, obviously an opportunity to potentially get to the 140 before it retraces, but I wouldn't take that first trade. I'd let it get up there first and then retest these levels from above before I'd have the confidence to actually go long on this. But if we do see a series of lower highs and lower lows, I'd be looking at trading back down to around that 137.80, which is the resistance that we can see through this area here. That would be my primary target on a small scalp on the way down on the US dollar CAD. US dollar yen did again hit the target for us, which was great. 152 was hit, 151 was hit, 152 was hit. It even got to as high as 153. Look, this is one of those ones where, again, it's going to continue to probably rise. We've done really, really well in the sense that we've been able to capture it right from the bottom, and we've got many parts of this long up. This was a very, very heavy level, the 151. You can see that we had resistance and support. It was a roll reversal zone. It paused there for 1 day before it took off again for another 200 points. That's just the nature of the yen at the moment. It's just an extraordinarily strong currency. So realistically, if it pulls back to around that level, I would be wanting a pullback back to around that sort of 151, then around bottom of some description, smaller time frame change of trend, and I'd be looking for it to go up from there. But I'm not really interested in the long now. I think we've had all of our fun there. I want a bit of a setup now. So a little bit more of a pullback would be great around to that 151. So then all of a sudden it's trading above it as support rather than resistance. And then we've got a pretty easy target to aim for, being the 153, because it's reached there very, very recently. So that is generally a good way to play it. So very, very good trading on the end, but now I'd just be a bit cautious on the long until we have a bit of a pullback and get a bit of a round bottom on it. I'd be a bit careful on that one. All right, dollar index, another one that just completely went up in the air. Yeah, look, it's pulled back today to around that sort of 104 to 104.20. 104 to 104.20 is an extraordinarily strong zone for the dollar index. So we know that we're probably expecting a bit of a pullback, which we are getting here. A very, very heavy level of support. So I would expect that we're probably going to find a little bit of support around here and then maybe continue to push on or consolidate for a while. I wouldn't be looking at any shorts much past that, to be honest. I think from the 104 down is pretty guarded territory now, especially since we've had such a big move up. It doesn't have to go down. It's not one of those ones where it has to correct. It could certainly find support here and hold it up. So I'll just be careful with that one. But it has been very, very good trading. But of course, the euro is the one that we would have been trading to actually get that. Really, really big move down. Look, it hit the all the targets, the 107.80 or the 107.50, sorry, is where we were, really finding this level of support. You can see we've got quite a few landing zones here and then takeoffs. The next real level for this is around that 106.80, which is this level here. I would, I'm not thinking that it's probably going to get there unless we see a bit of a correction. It'd be hard to imagine that it could continually sell off all the way there. This might just be a bit of a correction, but it is possible to trade that. Maybe a pullback up to around that sort of 108.80 area could be on the cards. That would be my feeling, that if I was looking for a scalp, that's probably where I'd be aiming for. But of course, you got to see a series of consecutive higher highs and higher lows on something like, say, a 1 hour time frame to show that the momentum is there. So as you can see, we've got a series of higher highs and higher lows, and we're about to get a 20-50 moving average cross. So that being the case, it's only a scalp, but we're talking about this level here around that sort of 106.70 to 80 area. That's what we're aiming for with this potential trade. If it's behaving itself and like I said, we're about to get a 20-50 on the 1 hour. So it is possible that there could be enough momentum to get it there, but just be very, very mindful that this is extraordinarily short, and obviously the prevailing trend is very, very short. If it pulls back to this level, that would be a potentially really nice trade to reverse. But again, at that point, we'd be looking for a series of lower highs and lower lows from there to prove that the resistance is going to hold up. But for now, I'd be looking probably at a little mini counter and only going for a handful of pips and just trading really tightly, because we are at a very interesting time of the year. The S&P 500, look, sell-off over the last, this week really, it's been coming off the highs. You can see that it basically all but reached an all-time high at the start of the week, really struggling to get any higher, but no real surprises there. Look, we're in the middle of earnings season, and we've got an election basically around the corner, so we know that all those things are very, very important factors for the S&P 500. I would be waiting for it to, even from this point onwards, look, the 20 moving average has done its job. Potentially, if a daily close below the 20 moving average, and maybe look for a move down to 75.50 next week, especially if it happens early in the week, I'd be looking for potential moves down around that 57.50 if we get a daily close below the 20. But if it does start to round bottom and start to sequence higher highs and higher lows on the smaller time frames, I'd be looking back up to around that 58.80 to 5900 level to be the target. I think it's probably going to hover in this zone for the next week or so. I can't see a reason for it to really sell off unless earnings start going disastrous, which they probably won't, given what we've seen so far, or unless there's an election shock. But again, that's still, it's getting close now. It's only a few weeks away, and I think then we're going to see some clarity as to which direction we're going. So just trade really careful here. If we're trading above the 20 moving average next week, start to look for moves up to the 58 to 5900. If we get a daily close below the 20 moving average, 57.50 will be the target. All right. Thank you very much for joining me this week. I hope you've had a great week's trading. There's been some really good moves on all of our watch lists, so hopefully you were able to get hold of some of those. Have a fantastic weekend. I look forward to seeing you all next week.